We've done so many of these podcasts where it's just like me yelling like a crazy old person about use cases, which sometimes makes me feel like I'm like shouting into the abyss because I am. But like you compare and you contrast the level of specificity when you get somebody who actually knows what they're talking about, like William on the podcast, and talking about not just like the intricate, nuanced details of the technology, but actually like why the customer cares and how they're going to pay for it and can do it at this like very intricate level. And then you talk to a bunch of the other like Web3 oriented founders, and it's very like, imagine a world that's just like still to this day, like I hear myself saying out loud, out of curiosity, because I have to go here. You know, you're in financial services broadly, and obviously in the guts of the financial system from a technology standpoint. How do you take like what is your perspective on the crypto role, if any, in the like underlying guts of the financial system, separate from payments, separate, I guess just like your life philosophy, if you will, on the Web3.
Yeah, I mean, I think you have to kind of you have to break out Web3 and crypto, but I can kind of give you my hot takes on the entire thing since that's what we all want. I think crypto and Web3 is really great at one thing, which is trading and speculation. And I think as you think about the intricacies of like securities markets, think about like market makers and stuff like that and the exchanges, I think crypto and Web3 is super interesting there. And so if you want to build really good trading stuff and speculation things, I think crypto and Web3 makes a really great point. But the problem is you kind of have to boil it down and you have to say like, okay, like, and then what? Like, and so like, what are you going to trade on the thing, or the thing that you are trading, what use case does it have? And I just don't think we've answered that. And I don't know if we will answer that candidly. And so I think generally, I'll be honest, I'm a little bit more bearish. That being said, I'm a tactician. I like solving very immediate problems. I like solving very clear use cases. And I have definitely missed a lot of really interesting boats. And there's a reason I'm not an investor, because it's hard for me to say, this is what I think the world's going to be like in 25 years. And I'm going to go make a high conviction bet on these various industries. I think also where we've made a bit of a mistake in crypto is we've associated it with the internet, where people are constantly like, hey, this is the early days of the internet. And so we just have to be like super bullish on our thesis holds. But I don't think they're really students of history, which is the internet actually started the exact opposite way of crypto, which is, hey, we have this very tactical use case, which is like, we need to like communicate digitally between these academic institutions, these military institutions. It had like perfect product market fit. What it suffered from was actually distribution was bad, and there actually was a lack of vision. And so over time, people started to build up over time. And in crypto, we kind of did the opposite, which we're like, hey, we have this really compelling vision, which I agree is super compelling, which is, you don't have single party counterparties. You don't have any sort of centralized institutions. Everybody owns the thing. And then we try to back into a use case from there. And I think we just solved it wrong. And I think the other thing that we've messed up a little bit is we have kind of rebuilt, as we've started to scale crypto, we've rebuilt a lot of the problems that they were trying to solve. So if you look at everybody who's actually providing value in crypto, they're simply just centralized solutions, which is nothing wrong with that, but we've simply taken a centralized approach. And then you have to look at it and say like, okay, like what value are we actually adding? And I don't think there is one.
If I could kiss you through the internet, I would do it right now. No, I just like, that's the thing that always drove me a little crazy. And this comes down to, I think you nailed it in terms of like the history of the internet. And it's honestly just like a phenomenal branding exercise, is this idea of like Web3 as if it's a new internet. And actually, if you look at the history of the internet, it, as you said, right, it started with this like very specific use case. And what we lacked was the 5,000 other things you could do on top. But we solved like a really very specific communication problem day zero. And that was, what we could build on top of. And here you're starting with like speculate on this thing that might have value downstream and going in the reverse order. And that tends to not find great product market fit.
I think there is value somewhere. I think there is value inside of DeFi or crypto. And I just don't think we've discovered it yet. But I think there's been a lot of charlatans in the space that I think have unfortunately kind of misled a lot of people and got everybody distracted. And so I think, from a 10 to 20 year perspective, I would not be surprised if there are really great businesses. I just don't know what they are yet. I think the other problem is, and this is a problem like all of Silicon Valley has, is we don't think something's successful unless it's $100 billion business. Which like, honestly, what if like crypto is amazing, but it's actually like a $4 billion like market maker? Is that a failure? Like, I don't know. But like everybody would assume it was. Everybody like came out of the gate and were like, hey, here's this new thing. If this is not $1 trillion, it's a failure. And I think sometimes when you're innovating in an industry, you have to kind of maybe pare down your expectations and say, hey, let's start a bit smaller. And so my gut is I think crypto and DeFi is going to be around, but I think it's going to be like a couple $1 billion business here. It's a couple $1 billion business here. And they're solving a little bit more niche problems. Like, I don't know, they're providing like stable coin solutions as like remittances to like in between second and third world countries. Okay, cool. Great business. It's like better than Western Union. Is it the next, Stripe plus Facebook plus Google? No, but it's providing real value. Maybe in 10 years, we've taken out all the market makers that are just like, coupon clipping trades. And now it's more decentralized and the actual end nodes make money somehow. I don't know. And like, that's a great $5 billion public company. Yeah, cool. I think that's probably where the world's going to end up.
Yeah, people struggle with the math, right? They look at it and they go like, this is game changing. And then actually when you do the math, to your point of, international settlements to replace Western Union between a few third world and second world countries that don't have like trusted banking systems between them. Sure. But, what's the market cap of Western Union? 3 billion.
Well, and that's where I feel like it's VC's fault in a lot of cases with this is like, when you're pumping $26 billion last year into this ecosystem, it's very hard to figure out utility and what's not speculation and what actually, like it really leads to a lot of different perverse incentives. And for people to feel like they have product market fit when they're really wash trading enablement, or, they're like, it's like they're robbing one person to pay the other, and then they're skimming off the top and they think they have a business when in truth, it's just this big circular jerk that's going on. Right. And like, it's not a product market fit that exists.
Yeah. Look, if you raise 30 billion a year for 4 years, let's just call it 100 billion of dollars that are, looking for returns, and at a minimum 2x, right? So you're searching for 200 billion, probably more of returns. And if the whole market size is actually, to William's point, 10, 15, whatever, I don't know, something that's not 200, that's where you run into issues. And that's probably what ends up happening, right? You see a bunch of like interesting companies that are pretty small in the grand scheme of things. And as a percentage of the total dollars that entered the ecosystem, it's just like mostly lighting that money on fire. But a few things will emerge that have some stability to them potentially.